Good afternoon, everyone. My name's Eliza Smith and I'm a manager here at Rubik's, and a big thank you to Stuart for all the fun things that you should be doing before 30 June. Today, I will be talking to you about all the paperwork and all the things that are necessary. So it may not be as fun and sexy as Stuart's presentation, but these are things that need to be done. So the first thing I want to speak to you is our trust distribution minute. So for anyone that has a family trust, we will prepare a trust distribution minute for you to sign and send back to us before 30 June. A trust distribution minute is a minute to describe where the income of the trust is going to go at 30 June. The same for our company clients. So if you're going to prepare a dividend and pay a dividend to the shareholders, this documentation needs to be signed before 30 June, and the payment does need to be paid before 30 June to include it as income in this financial year. As Stuart was saying before, as part of our tax planning, we speak to clients about establishing a company as a beneficiary of their trust. Now, if this is something that we have discussed with you, we are in the process of getting that set up. However, it is something that needs to be done before 30 June. The company needs to be incorporated and everything set up and running as a company. As a company, the flat rate will either be 26 or 30% for the year 30 June 2021, and it is also a better tax planning for the trust. Division 7A. So I'm not going to get into the nitty-gritty of this because it is quite a complex matter in tax law. However, if you have a Division 7A loan, no doubt you've heard from myself, Mark and Stuart about this matter, and there is a current loan in place. So for a quick little rundown, a Division 7A loan is when a shareholder or a beneficiary of the trust takes money out and is not repaid before 30 June. So before 30 June, at Rubik's will make sure that you do your minimum repayments, any interest is declared, and also that the loan agreement is up to date. Payroll tax. So this is the state tax on the wages. If your payroll every month, including superannuation, is at 54,166, you will be eligible for payroll tax to be lodged before the 21st of July 2021. If you think that your wages are going to hit this level, or if we've flagged it with you, we'll ensure that your registration is done. STP obligations. So STP stands for single touch payroll. It's a way for the ATO to measure and report the wages every pay cycle, whether it's weekly, fortnightly, monthly. All employers, so if you pay yourself just a wage and you're the only employee, need to register for STP from 1 July 2021. So if you are a bookkeeping client of ours, don't worry, it's on the books. We're making sure that this is prepared. The small business income tax offset. So this is $1,000 that you get to reduce your income tax bill. Now, there's only 3 business entities that can get this. It is a sole trader, a partnership, or a trust. If you do run your business through a partnership or a trust, then this gets distributed to the partner or the beneficiaries. If it's in your sole trader, you'll see it as an offset against any income tax payable. The maximum of the offset is $1,000, and your income of the business has to be $5 million or less for this financial year and the next few upcoming financial years. Motor vehicle logbooks. Everyone loves to claim motor vehicle for an expense as a deduction. However, you need to ensure that your motor vehicle logbooks are up to date. So I know people don't like tracking these things, but we need to get it done. So please ensure that at least 12 continuous weeks have been recorded in your logbook before 30 June 2021. That proportion of that logbook is what we can claim as a motor vehicle expense, whether it be fuel, repairs, depreciation on the car. And I do want to repeat 12 continuous weeks so we can get the right percentage. Make sure you also include the closing and opening odometer readings. Well, hasn't COVID changed the way we worked? And the number of staff and business owners working from home has increased. So the most important thing for you to claim that home office expense, such as your electricity, your gas, your internet, is to make sure you log the hours you work. Now, this can be as simple as a spreadsheet or keeping in your calendar when you're working from home or when you're working in the office, but you need to ensure that you're logging the hours that you work from home. You also need to ensure that you measure that place that you're working from home. So you can't just claim 50% of the electricity if your office is only 20% of the home. Now, these are all to make sure that we are covered by the anti-avoidance warning and that we have every T crossed and every I dotted. So the ATO will come looking for motor vehicle logbooks and home office. I have seen clients, unfortunately, had motor vehicle deductions disallowed because they weren't allowed to show a logbook. So to summarise, paperwork, yes, it's all before 30 June 2021, but at Rubik's we have that checklist. Please don't avoid our emails with those important attachments and signatures, and make sure that you get them back to us before 30 June 2021.